Welcome to Financial Adrenaline. This is an information series exploring the concepts of strategic finance to help you integrate these powerful and critical tools into your everyday business decision making. My name is Larry Kirkenbauer, president of Excalibur Advisors, and I'll be your host. I've been wanting for a long time to find a visual way to help businessmen understand cash flow, and I think I've got 3 or 4 slides that can really help you. I know we all understand that there's cash on the balance sheet, but very few people really understand how cash flows through the balance sheet and why the balance sheet is so critical to understanding cash flow. It doesn't occur on the P&L, as I'll show you. So I think this will be a way to help you really drive improved performance, increase free cash flow, and hopefully keep more of it. Take a look at this first slide, and I think you'll see a beginning way to get your arms around what's really happening here. You notice what we've done is we've taken net revenue for a sample company and translated it in the equivalent of $1. And you can see that full dollar out here on this bar chart representing revenue. And then as you begin to take away, say, a cost of sales and operating expenses, you end up with an EBITDA number of 11 cents for every dollar of revenue. We'll come back to that. And as you take away depreciation and interest expense and income taxes, you end up with net income after tax of 4 cents for every dollar of revenue, which is represented right here on this bar chart. And then when we add back the non-cash expenses like depreciation and amortization, we end up with 8 cents of gross after-tax cash flow for every dollar of revenue. So that actually seems quite appealing. This company's doing rather well. But there's one big issue we don't want to overlook, and that is that all of this activity, every single penny that occurs here, is only occurring on the P&L. None of this happens on the balance sheet, which is where most cash flow is derived. So even more importantly, you hear so much about this EBITDA number here that it's really worth emphasizing that this 11 cents of EBITDA is not, and I repeat, is not a good placeholder for cash flow, as we will see. So let's go beyond this 8 cents and see what else is happening on the balance sheet that affects cash flow. So here's where we left off. There's our 8 cents of gross after-tax cash flow, if you remember. But now we start dealing with the balance sheet and changes in receivables and inventory, what's happened. And now we see that over 15 cents for every dollar of revenue has been lost to cash flow because of the way in which working capital was managed. So now our 8 cents, with a little bit of rounding, is deteriorated to a minus 6 cents for every dollar of revenue. And with limited activity in the fixed asset department, very few capital expenditures, we now end up with 6 cents to the negative for every dollar of revenue, in a category we call cash flow before financing, or otherwise known as free cash flow. And this is the part you should really be trying to drive in your business, because this is the cash that comes before financing and gives you the maximum flexibility and discretion. Remember, though, once again, that here we had all of our 8 cents that's now deteriorated to a minus 6 cents, primarily for the activity of the balance sheet. Now when we turn our attention to the comprehensive cash flow, there's our 6 cents to the negative for every dollar of revenue in cash flow before financing. And we see that the company offset that deficit by borrowing almost $1.5 million in cash that picked up 9 cents to the good for their cash flow. Not much happened on the equity side. So total financing cash flow is about 9 cents. So what do we end up with? Well, there's our P&L cash of 8 cents. We invested 6 cents of it on the operating cash flow side, keeping in mind that we really lost 15 cents there, so we end up with 6 cents. We raised 9 cents in debt financing to end up with 3 cents to the good for every dollar of revenue in our comprehensive cash flow. What's critical to remember here is that we lost 15 cents for every dollar of revenue on our balance sheet and operating cash flow, which is largely the way we manage working capital. And this is a critical thing that most businessmen forget when they proudly look at their 8 cents to the good for gross after-tax cash flow, or the 11 cents we found earlier that was our EBITDA number that so many companies think represents cash flow, and I think we can clearly see now it doesn't. There's one more thing I want you to see, and that is another example of exactly how cash flow before financing varies from EBITDA. And you can see in this chart, it's as clear as a bell. Here is real cash flow for this company, the comprehensive cash flow, rather the cash flow before financing we talked about, in really constant decline. And here's the company's EBITDA, which equally has been in decline. But notice the gap here in these two, and in particular, notice this gap here where they're not remotely close to each other. This is a great example of why EBITDA is a terrible placeholder for cash flow, and why companies who use it, in large part because they know their banks are looking at that number as part of their covenants, is very misleading, and you can find yourself out of cash even though you have positive EBITDA. As we can see here is positive EBITDA of almost $2.4 million, a negative cash flow of over $1 million. I hope this video was helpful to you in understanding what true cash flow is all about. And as you go to apply this to your own business, remember these three critical factors. Number one, EBITDA does not equal cash flow. It's not a good placeholder for cash flow. Number two, a lot of the cash flow that's most important in your business occurs in the balance sheet, so make sure you look carefully at the management of working capital. And three, you really don't understand cash flow until you've looked at comprehensive cash flow and understood all the sources and uses of cash to be used in your business. So good luck in your implementation. I hope you won't hesitate to reach out to me through my website at Excalibur.com with any questions you may have, and I'll do everything I can to help you grasp and fully understand these concepts. Thanks very much for listening to our Financial Adrenaline series featuring our powerful Business Ferret performance tool. Please note that the transcript of this webcast is also available as a free PDF file in the Learning Center at Excalibur.com under the Financial Adrenaline tab. You'll also find the links for our YouTube and iTunes channels for this series prominently displayed on the Excalibur website. Don't forget to sign up for our newsletter as well, and subscribe to our blog feed to make sure you don't miss upcoming podcasts and webcasts in this continuing Financial Adrenaline series. We also encourage you to contact us directly. You'll find the contact information for our offices in the contact section at Excalibur.com. We do offer workshops, seminars, and keynote speeches, as well as consulting services to middle market companies. We also encourage you to share your candid feedback or suggestions about future topics, so let us know how we're doing and what more we can do to help you. We're very fortunate that modern technology and social media allow all of us to share knowledge and help each other become more accomplished business executives. If we are deserving of your endorsement, our thanks for telling others about this series. So stay tuned. There's a lot more to come. In the meantime, think big, take action, and make sure you're integrating strategic finance into your everyday business decision making.